Sure.
Hello, Captain and Vignesh. So I want to know about your status, means what you are doing right now and how you are planning your investment or anything right now. So Vignesh,
What you're doing, meaning?
means what you are doing and means your field, your work, like you are full time work, you are on full time or
I'm
part time work. Yeah.
full-time IT guy,
Okay.
and the investment side, I'm new, pretty new.
Okay. And how you are doing your investment till now?
Not doing anything, to be honest. Does that count?
And Captain, what's your real name, Captain? Is he here or left? Captain,
He's on mute.
unmute. He's on mute. Okay. So I will start like whatever we are doing, like what we do, we generally do. Wait a second. Someone. Okay, what we generally do whenever we have, like we have credit our salary, so it will be in our saving account, right? So we keep it like in our saving account, and we know that our saving account gives only 3% interest, whether it is a government or private, mostly, right? So if you talk about a private bank like SDFC, so we are getting 3%. If you are talking about like state bank, any government bank, so we are getting 3% return on our saving bank account. So okay, we are okay with it, like okay, I am getting, suppose like I take a amount like I am getting 50,000. Okay, so if I am getting 3% without any work, without anything, without any effort from the bank, it's good. Because in other country like US or any developed country, their interest rate is zero. So if you keep their money, so either even some countries have negative returns. Like if you keep the money there, so they will charge you. And in USA it is zero, so you are not getting anything. But in country like us, we are getting 3%, and we are getting almost 6%, so 5.5% right now in government, and now it is 5.25. And if you are going for a new bank like Fincare Bank, Equities Bank, or ICDFC Bank, so you are getting approx 7% interest on any FD, right? So there is a very big difference, 3% and 7%. Actually what we think like, okay, so my salary is 50,000. If I keep that particular amount in bank, so after 1 year I am getting 3,000. Sorry, on 50 you will get 1.5k, right? So you can unmute and interact if
Yeah,
you
that's
want,
correct.
right? So
Yeah,
you
yeah,
will
that's
get
correct.
1.5 after 1 year. So it look like, oh, it is very small amount, so we should not bother about that so much, right? It is like our three, means one bill or two bill for our outing. Like if we go to for outing for two time, then it is like 1.5k or 2k. Okay, so we are not bothering about it. And when we say, oh, if you keep it in FD and now you are not able to use it for 1 year, so you are like, oh, in saving account I can keep rotating my money, I can use it, I can just use and keep it again. Like you can rotate your money as you want. But in FD you have to keep it for at least 1 year, means as we are calculating the annual return. So now what you are getting, now you are getting extra 1.5k. And now you are thinking like, okay, after 1 year, after the locking period of 1 year, I am getting only 1.5k if I'm keeping my 50,000 with bank. So you are not uh, interested in this thing. like, oh, it is just like 1.5k. But if you keeping your money like, and I am taking the whole amount like 50, you are using the amount for your household things, and it will be like 10k. So now it become like 200 or 300 or 400 annual interest. So at that time you will be like, oh, I don't want to keep that particular amount in FD. So but no one is thinking about long term, like what happened after 5 years, what happened after 10 years, what happened after 20 years. Because we are earning and earning and earning, and that particular amount we have to use in our old age home, right? Old age, in our old ages. Because whenever now we are, if we are, even we don't have money at one time, we do not have money, so we know how to tackle that situation. Like we can take a loan from our office or any bank for our 10,000, 20,000, 50,000 is not a issue. We can borrow from our friends, we can share that particular amount within our family, right? But when we are in our old age, so it can happen that either we are not able to do any work, or we are not linked with any relative, we are not linked with any office or anything, so we are not getting the loan. Even bank will not give you loan, because you are at old age and you are not working anything, so they will just ignore you, right? So at that time you need money. Actually it's all about the requirement in our retirement age. So if you are working and you are just using all the money, and you are thinking that yeah, I will keep that particular, suppose I know that my expenditure is suppose my expenditure is 10,000 per month. Okay, you have calculated 10,000 per month. Let me open the calculator. Hmm.
हाय त्रिलोक भाई.
Yes, yes.
कैप्टन अच्छा अनिरुद्ध
Mhm.
here.
Yeah, yeah.
नाम पूछ रहे थे ना आप?
Anirudh.
हाँ हाँ हाँ. So if you don't mind, may I ask you what you do actually?
Yeah, I am in R&D department. I am a design engineer. So
Okay,
from
in which
last six,
company?
it is Access Cadence Noida.
Oh, okay, you are living in Noida.
No, I am living in Gurgaon.
Good. So right now you are doing work from home, or
Yes, yes, work from home.
that's good, yeah.
Yeah, so basically because before entering in share market, I started my investing like FDs or saving and everything from my childhood itself. Because I am not new to this concept, like we have to keep our money in FD or anything, and government bonds or anything, instead of saving account, instead of jewelry or anything. So I am not it is not a new thing for me. We are doing this from means from long time, right? So I was very keen to know about the why, how to do the IT returns, or how to save the money, how to fill our taxes, how to save taxes, anything. So I was keen. Even I was from mechanical. I used to read everything, and now I am in share market itself. So I have met very big guys who are working with crores, 100 crores, and I am just chatting with them from last 2 years. So I got many things to know, which I cannot with with my current capital, right? So let me guess. Suppose if your expenditure is 10,000, you know that your expenditure is 10,000. Okay, so you are saying that I can enjoy my life right now, and why to worry about old age? Even I don't know if I will be alive or not, but if I'm alive, that's the issue. So I will keep my particular amount with me, and what will I do? I will just use all other money, right? So you have decided that every month I have to spend 10,000. So whenever you spend 10,000, it means for year you need 1,20,000, and you are assuming that till 40 or 50 age I will be working, right? And for next 10 year I need this particular amount. So what I will do, I will into this to 10. So obviously I am getting a amount of 12 lakh, right? So now you are thinking 12 lakh, it is like my 2 year salary. if you are getting 50,000 and I can just save 12 lakh and just expend each and every penny, right? So what will happen, we are thinking about today, and the amount I am talking about 12 lakh is the current value. We say it present value. Just go to Google and just calculate what will be the future value of 12 lakh, right? Let me do. Actually, I'm sharing the screen, but if you are on only voice only, so it's okay. I will search and let you know. Okay, future
Yeah,
value.
you can see your screen.
Yeah, future value of 12 lakh. So you can take any amount. Like if you want it, it must be 50 lakh, or it must be 12 lakh, or it must be 10 lakh. And that's your wish, right? So future value of see, Google is showing future value of 1 crore in 15 years. Let's see, and I'm opening a calculator. So actually, what we neglect thing, let everything has its increasing in cost. Earlier we are buying a property in 5 lakh 10 lakh, now it's in 1 crore. Why? Because of inflation. Earlier the vegetables are like 1 rupee 2 rupee, now it is like 50 rupee or 60 rupee. Why? Because of that inflation. So we are neglecting the inflation, we are not aware, even aware about the about inflation. Many people are not aware about the inflation. Why we are getting the FD rate like 6% 7%, even the other countries don't have that much, and they are on zero. Why? So I will put the amount like 12 lakh. Okay, 12 lakh, 12 lakh, and inflation is, and you know what's the rate of inflation, Vignesh, or I
It
forgot
is
your name.
5 generally, but in medical and all, it is some 20% or something. It depends on the field, right?
No, overall inflation.
I think it is average 5 or 7.
Yes. Actually, the limit for the RBI they take is 2 to 6%. Two means they want the inflation to up to 4%. But right now, for the particular these 2 quarters, it is 6.7 or 7%. Right. So we are taking that average like 5 or 6. Okay. So I am taking the average for 10 years. Okay. Okay, so if you want that particular 12 lakh after 10 years, I'm just talking about after 10 years. I'm not talking about like your age is like 30 and you need it at 50. So it is like after 20 years. If I keep it as after 20 years, so if you need 12 lakh now to survive for 10 years, so it will be like 38 lakh that time. You need 38 lakh. Are you getting my point? It is like uh, it is like 3 times of the amount right now you have. If you save 12 lakh right now, then after 20 years, it you need 38 lakh to survive, just to survive 38 lakhs. So can you imagine if you keep the 12 lakh in your saving account right now, will it become 38 lakh after 20 years? Because you need that to survive, not to enjoy life, just to survive. Are you getting my point?
Yeah, man, inflation compounded,
Mhm.
basically.
Yes,
Yeah,
yes,
yeah.
got it.
But we people, we are not doing anything. Like only 1%. Only if I am correct, 75 crore accounts are there only. Means our population is more than 130 crore. Only 75 crore people have account. Even it can be a zero account, but 75 crore. Even 2 crore people just do the investing, and investing is like it can be 500 rupee or 100 rupee, right? Or it can be a crore or something. So only 1% Indian invest, and in USA 30% people invest in market or anything, right? So my issue is that if I am learning something, it's my habit to tell what I have learned in
Maybe
recent days.
because of the risk.
Yes, because it is our mentality that we do not we do not want to take risk in anything, not in investing in anything, because whenever you are mm, if you are in 11th or 12th, you always take as a math as a optional, because you don't want to take risk, because if I am not able to pass my uh, e-commerce, so I can go for the science. If I am not able to pass science, I can go for commerce. So every time we take option, and we are not keen to take risk in our life. From childhood, we have learned that अच्छे marks lao, take good grades, you will get a good job, else you will not. So you keep studying and studying and studying just for getting good marks, so that you will not so that you can get good job. Actually it doesn't relate. Actually, the if you are getting the good mark, you will get the good job. It doesn't matter actually in real life. Means our system is like going on like this itself, so that's why it is we need the marks. But actually may in future I think it will change, the trend will change. Okay, so what happened, we Indians are do not take risk. So why to take risk? Because we have so many things to invest, so many things, so many option by government itself, that don't take risk. We are here, they are like insurance for us. If a bank fail, government is there. So, if you heard about Yes Bank, they have put that bank in moratorium for 1 month. And but why? Because they want to save the depositors. They want to save the depositors money, so that bank do not allow any loan, any bad loan to any other company, so depositor will get affected. So they just lock the bank for 1 month and check every each and everything, and then it's okay now. Same for many other banks, right? So bank government is working like insurance for us. Even they have made that if anyone have the saving or FD amount of 5 lakh, earlier it was 1 lakh, now it is like 5 lakh. So if some mishappen to the bank, if it get closed, so you will get 5 lakh. Even if you have 1 crore, you will get 5 lakh. And even you have 1 lakh, then you will get 1 lakh. So up to 5 lakh there is a insured by government, right? So no one want to take risk. So but why, what is the risk between amount keeping in saving bank and amount keeping in FD? What will be the risk? How the risk will increase? I don't think there will be a risk, because even in saving account your risk is with bank, and even with FD the risk with bank. You are not good. So if you are going to use that particular FD rate like 6%, so what you will get if you save 12 lakh now and you keep it in our FD for next 20 years, like it is my what it is my retirement plan, retirement fund. So it will be 12 lakh of debt period, like after 20 years. So you can use it. It will be like 38 lakh of debt period, right? So you can use it easily. Even there must be some new schemes or new things like anything in next 20 years. So that's the one thing. Like I want to tell about the inflation. But you are working so hard and anything, and you want that there will be no risk in our investment. So why don't you go for any other further step that we can get more than 6%? So I will tell you something like the mutual fund. Okay, the mutual fund depends on equity, if, share market. 99% mutual funds are depend on equity. Even if you are taking at low risk, that's a debt fund. If you are investing in debt fund, it means like government bonds. So even government bond, even the amount government is getting, it is directly invested in share market itself. Okay, even the companies are taking loan. Why they are taking loan? The companies are taking loan from banks, right? Even any company like Reliance is taking loan in from bank. So indirectly bank is investing on that company and getting the interest. And that what that company is doing, that company is growth, doing growth. If they are giving suppose 12% to bank, so they must grow at least 50% or 20% per year. So that particular company will keep that particular 8% with them. And what happened, and whenever the shareholder, share market whoever invested in that company, they will get that particular 20% because the company is growing 20%. So that's the cycle of that particular investment. So banks investing in company indirectly giving to us, and like this everyone has the means how bank will get the money. It will not generate it. How government, if you are keeping the amount in saving FD instead of saving, how bank will get that extra 3% for you? Obviously they will lend someone for the that extra 3%, like in 9%. And they are lending it to, suppose, for government bonds, how government will get that 9% plus 3%, like 12%? They will invest somewhere else. And if they are investing somewhere else, then how will they get that extra 3% for themselves? Obviously they will do something. So that's how the cycle works. They are if their growth is 20%, so they are getting that extra 5 to 6%. If their growth is, suppose, 2%, 3%, so how they will get that amount? How will they survive the interest rate itself? They have to give 12% interest rate, and their growth rate is 2%. So they will not survive. Same with us. If the inflation is 6%, 7%, 8%, and we are getting just 3%, we will survive? No. In future means we are earning right now, but if we are not earning, we will not survive. So that's why RBI has mandate like this. You cannot say mandate, or you just create like this, that even the FD rate will be like more than the inflation. So you know that rate cuts are there in previous months. If you have heard the news that RBI is decreasing repo rates, IBA decreasing the rates, interest rates. Have you heard about this?
Yeah, it keeps happening once every 6 to 8 months, right?
No, not every. It's
I
happen
mean,
when the
frequently,
demand. Yeah.
whenever there is a hit in the economy or something, they'll raise
Yes,
your,
yes, yes.
they'll decrease your PPF, or like somehow they have to balance the money.
Yeah,
And even
yes.
if they balance 0.5%, it's like crores and crores for them.
Yeah, and why it happened, I will let you know. Because whenever there is a demand, when there is a slow or what we can say, a slow economy, or there is no demand, so how they create the demand? By decreasing and increasing repo rate. And how it affect our FD rates? And now you know that earlier it was 6%, now then again and again it is decreasing. We are getting less FD interest. Because what government do, they decrease the repo rate. The repo rate, it means the bank itself is getting money from RBI. Suppose the RBI is saying, take money from me at 5%. Okay. So now bank is saying, if I get the same money at 6% from any person, it's okay, because I have to keep that money with me till without any, like, means I have to not to give any guarantee. Because for RBI you need to give the guarantee, and they will give you that particular money at 5%. Okay. So now they are getting the money at 6%, so it's okay. Now when RBI is saying, take money at 3.5 and 4%, why will a bank will take money at 6% or 7% from you? They will say, if you want to take at it 5%, it's okay, else not. We will get that same money from RBI. So whenever the RBI decrease the repo rate, your FD rates also decrease, your interest rates also decrease. Because it's depends on that particular demand and the ratio. They try to maintain the ratio. Even when the bank is getting the interest rate on low rates, so they also decrease the interest of loan. So earlier you were getting the loan at 10, now you are getting the loan at 9, so that you can take more loan. If you're taking more loan, so that cycle start working. If you're taking more loan, you will work plus 3% to fulfill that loan. And whenever whoever invested on you, or wherever you invested that particular money, that then second person has to work plus 3% to give you that particular interest. Are you getting my point? So that cycle start working. If you are getting money at 20%, you will say, let's keep the money and in the FD, and just let's sit and do not work. So, and the company will say, let's delay your growth plan, because right now the interest rate are 20 and it's too heavy to get the 25% growth. So now you are getting the loan at 8%, and instead of 12%, you have to show the growth at 12% only, 12% to 14%. So they will start increase expenditure on their growth. Are you getting my point? That's how the cycle works. That's the reason the repo rates have changed. So it is the cycle of increasing the demand in our economy. So that's why your interest rates are going down. And if we talk about the developed countries like US, so why they have zero? Because there is no need. I think they are developed, and there is no need to rotate the money in cycle, I think. Because they already everyone is working there, and everyone investing, and everyone has their own plans, and the government is giving them free education and medical, many things, and their tax rate is so high, means equal to India, if you can say. Means 40% for upper class we have in India. So I think they have 40% itself. But for lower class also, they have good tax rates. So that's why they are taking the tax too much, and they are giving the facility. But in India, we are almost 2% Indians are giving tax. So government cannot take that particular burden, and that's why we Indians have to take that particular burden, right? And we have to just rotate our cycle itself, and sometime government has to intervene. So that's the repo rate. So now in future, you will not get that particular FD rate also, that 6%, 5%. Slowly they will keep it decreasing and maintaining it as per our country growth. And you might be getting like 3% or 4%, or just equal to our inflation. So what will you do after that? Now you are getting 6%, 7%, and you can see that the slowdown in economy has slowed down our debt return also. So there are many different things like we can invest. One is mutual fund, I have told. But the thing is, there is three type of risk, like low risk, medium risk, and high risk. Low risk is like they will invest in debt funds. They will give you 6%, 6.5%, or at least more than a FD. If you're talking about a government FD like 5.5, so they will give 6%, 7%, or if you are lucky enough, they will get you will get 8%.
Kind of, if
So
you're
what
sharing
I
your screen, we are still seeing your Chrome only. I mean, we are not seeing your PPT.
Sorry.
If you think you're sharing a PPT, no, you're not.
No, there is no PPT.
Okay.
It is like the topic I want to share. I have just write it. There is no PPT. It is just
Okay.
a one slide. Yeah.
just asking a question like
Uh-huh.
to invest in a mutual fund
Hmm.
in a low risk sector, like as you said that the company or the bank will invest in the debt amount, right?
Yeah. Yeah.
So what I understood with this, like we can go for it, right? It's a
Yes.
low risk and like it's a profitable thing. We can
Yes.
invest in mutual funds, right?
Yes. but
Okay.
but one thing that why we are investing in mutual fund, first it should be clear. Like we need more more the return more than FD. If we are not getting a return more than FD, why we are going to take that low risk itself? Because I think if we are talking about like bank failure, only from one bank will fail out of 100. So we will keep that money in our FD itself, and it is more than safe from mutual fund, right? Even
Mhm.
what I have told you, like government bond, when we are purchasing government bond, government is investing that particular amount in share market itself. and
Mm-hmm.
it happened that some companies are going bankrupt, so you are not getting anything. Only one thing is safe, like EPFO. Even EPFO have lakh thousand crores. You are getting their, I think their AUM is like 10 lakh crore or 20 lakh crore or 40 lakh crore. What they are going to do with that 40 lakh crore, 50 lakh crore, yeah, 1 lakh crore amount? They are investing in different things. And you, because you do not have that knowledge, they are doing for you. And they are just like government, and they are taking their salary as the commission. And in mutual fund, we are giving commission. So are you getting my point? If you are,
Mm-hmm.
if you are using FD, so what they are doing, they are using your money to lend someone, and they're getting that, but then in middle commission
Mm-hmm.
for 2%, 3%.
Mm-hmm.
same is
Got
for
it.
same is for mutual fund, same is for EPFO, that you are putting in your money with EPFO, PPF, or any
Mm-hmm.
government bond or any government scheme like Smriti Sukanya for daughters, anything. What they are doing with money, they are not keeping it. If they are keep your money with themselves as a cash, so every year it is decreasing with 6%, right? With the
Mm-hmm.
inflation. So how will they will give you the return of 6% when they have the zero return? So what LIC is doing, LIC, what LIC is doing, they have the knowledge, they have the means analyst, they have the analyst, they have the every full team. So what they are managing the risk. So like 50% in equity, 50% in debt fund, 50% in more heavy means more not moderate, heavy high risk funds.
So I'm just like I'm curious here. Like
Mhm.
I just want to know because like I've stored so much of money in EPFO. Okay.
EPFO, okay.
Yeah.
Uh,
So I'm not. I don't know about the interest. Like government is providing the interest on that particular amount or not?
yes, yes, you can actually each the EPFO or anything, the interest rate
Mm-hmm.
change after every 3 months. So earlier,
Okay.
yeah, earlier like it was 8%. Now it was like 7.5%, or now it will be like 7%. So if I just Google it,
So what is the benefit to save our money in the EPFO account? I think because it's decreasing day by month, so I don't
yeah,
think
yeah,
whether
yeah.
it's
So
it is.
that's how you have to check that. For 2019 to 20, the APF rate is 8.5%. Are you getting that same amount in any FD? If not, then obviously you are getting 1% extra. So, but your aim is to get the maximum return with low risk.
Mhm.
So EPFO is the best thing
Yeah,
to
yeah,
get
got
the
it.
8.5%, right?
Hmm.
Are you getting my point? So
Yeah, got it.
now we can go for next, like PPF. PPF is giving like 6%. You are saying that no, we need uh, some additional benefits. Additional benefit, like we can take out our money when we want. So it is a PF. So but in EPFO it is a like locking period. For EPFO you have to keep your money like for 15 years or something. I don't know,
Hmm.
you can just Google it. It is like there is a locking period, right? You so
Hmm.
every high return will have the risk, and there are some features, or there are some conditions. So like Simriddhi Sukanya, they are giving like 7.9 or 8. Earlier it was more than EPFO, now it is down, right? After the decreasing in the interest rates. So in EPF, in Smriddhi Sukanya account, you have the 21-year lock-in period, but you are getting high return than FD. So that's the reason they are using your money for 21 years. And you know that after 21 years the value of that money is already increasing, like 12 lakhs. You are putting 12 lakhs, and that money will be 38 like, and they are giving you that fixed amount. But what they are getting plus 3. What I have told you in the starting, they are getting plus 3 on it for every year. And when you compounded that plus 3, they are getting very much money. But the issue is how they are managing your money. because as I told in group, like even a fund manager is getting the commission with your money, okay, and the government employee is getting the salary with your money. Do you think you are working in IT company and you are working somewhere any in any company? Are you means, are you affected by the company's quarter result, or are you bother about the if the company is growth have the growth of 20% this year or not, or you are worried about like why it is 20% and last year it was 22% growth? Are you worried about your
No.
company? No. Why you
No.
are not worried about? Because you are getting your salary, and if a company is going good, you are going good with the company, and you will be worried about you will worry when you will not get salary for 2 months, and your accountant will say that we have no cash. That time you will be worried. So same with the fund managers, same with our government employees. They are working for their salary. Why they will bother about you that you are getting 12% this year and 13 and 10% the next year? Why they will work so hard to get that 12% return to 14%? So because it depends on you how you are managing your money, because they will manage their own money and not yours, and you have to manage your own money by yourself. That's the reason I am telling you everything, because you have to increase your return and not the mutual fund guy or not the EPFO guy, right? So now you are getting 8% return. So I have told you two types of investment more than FD. One is EPFO and one is Smriti Sukanya. Smriti Sukanya is for daughters, so for married guy only. So you will not be interested with that. Still, I will show you just for knowledge. Smriti Sukanya interest rate. See, 7.6. So earlier it was more than EPFO. Now it is going down. That's okay. We cannot do anything. We have the lock-in period of 21 years. And obviously and obviously we can just increase or decrease our that particular SIP, right? So earlier it was 8.4, 8.5 more than EPFO, and now it is 7.6. So even if I'm getting the return more than FD, why will I will worried about that? I'm getting less return. If it is like 5%, I will stop my SIP. I will to minimum amount like 500 rupees, and I will keep that particular amount in bank FD itself. That's simple. So you have to manage that particular thing. Until and unless it is more than FD, why you have to worry about, right? So next is you can go to for mutual fund. So now I will show you, if you can see my screen, I will go to SBI mutual fund. I am going to SBI mutual fund because I'm using it. And second thing is that it is a government, and even like Yes Bank can get bankrupt, or the DHFL, NBFC bank can get bankrupt. But I think SBI is the only government bank that can survive each and every up and down. So that's why I'm showing you, and I'm showing you how much return you can get from like 20 years, 30 years, 40 years if you're investing in debt fund or anything. Okay, so here is the list. View all. Okay, so you can just visit any website, just for your knowledge. Just keep scrolling and keep looking at how it works, how things work, how we can increase our money, because we are working only money itself. Anything we are doing right now is for money. So see, equity, hybrid, other scheme. I have clicked like something, type of mutual funds. Type of mutual funds, fund type. So equity, debt fund, hybrid means combination of equity and debt. So what it will be like, the safety of debt and the high risk of equity will be combined, like hybrid. So solution, other scheme, other means it can be like index fund or anything. I will tell you about the index fund for sure. So you can see SBI ETF, it is giving 22 for 22%, but its age is 0%, 0 year. So we will not consider this because 22% is very high. But what it is like, it is just a very new account, and you know the market is rising, so obviously the return will rise. So SBI focused fund is 16 years. So even if you are with this fund for 16 years, you will get 18.96. So now what happened now? Our return has become more than double. So it is like it is not a guarantee that for next year you will get 18.96, or the for next again next for 16 year you will get 18.96. Because it's all about uncertainty. We are not even know that our FD will give our 7.6% or 5% or 2%. So it's all about uncertainty, but we have a idea like, okay, this fund can give 18.96 small cap. Okay, for 11 years it is giving 18%, it is giving 17%. It health means health opportunity, it means healthcare. They are investing in health stocks or health type companies. So equity hybrid 15%. As long as I am going to scroll, it will give it will decrease the interest rate because the fund types changing. So it is like long term equity fund. So equity fund, it means they are just focusing on equity. So like share market, only share market, no debt fund. So in 27 years you are getting 15. We are talking about like 20, after 20 years what will get, I will get the 38 lakh, but here you will get the double amount. You can even enjoy life little after 50 years too, right? So we are just assuming, we don't know what will happen the next. Okay, so in Magnum you are getting this, and I will tell you what I have invested in three funds. So here you can see the low risk. So see, their written itself, it is for the retirement long term capital, long term retirement long term. It is not like just give your money with them, and after 2 years you are going to get that particular 18%, 20%, 22%. You will not get it. All about long term
Like
capital
like in
appreciation
like how many for how many months we have to invest it
until and
approximately?
until you do not need that money. That's it.
Okay.
Yeah.
So if,
So
for
yeah.
example, if I will go for just wait,
Hmm.
if
Yeah.
I will go for SBI Technology Opportunities Fund, okay,
Okay. Okay.
its interest rate is 14.1,
Hmm.
correct?
Hmm.
So if I will need my money after 1 year,
Okay.
so what is the interest rate on that particular amount?
So it depends on that particular sector on that particular year. So if there
For
will be a,
suppose I
yeah,
invest, for suppose I invest 1 lakh, okay?
yeah, yeah,
For invest, I invest 1 lakh. Then after 1 year, I need that money back. Then
yeah,
how
yeah.
much that?
Yeah. So when it say risk rating high, so that's the risk itself. Because you are saying that in 21 years you are getting 14%. How it can be a risky? Okay. You are saying how it
Hmm.
can be risky because in bank I'm getting 6% and they are giving 14% for 21 years. And how it can be a risky? Actually, the risk is this only. If you are getting, you need your money after 1 year. Suppose that 1 year ends in March, the and March 2020, and all the market was 40% down. So what you will get that in particular year from SBI Technology Opportunity, you will get minus 40%. That's the risk, right? But after 6 months, what you are getting now, that you are getting again, you are getting 14%, even more than that. And someone has invested in March, he will be getting in 6 months like 50% in technology, technology share stocks, because they are doubled from the March fall. So that's how you have to manage your timing. If you know the timing, that oh, market has fallen so much, I have to invest. Okay, if you know about the market, but we are talking, but who is taking the mutual funds? Why he will not invest in share market itself? He has no knowledge, because he doesn't have knowledge, but he want to bet on the someone who has more knowledge than him, and he is the analyst, and he has the experience of 15 years, and he is managing my risk. So how he will manage your risk? Obviously he has to invest in market itself, but he cannot control the market. Even if market fall, his fund he is managing, it will be down like 40%, but he cannot do anything, because he cannot short sell, or he cannot just sell off the 1 lakh crore shares at that time. He has to just sit, and he has to wait to settle out the market to add more. And what people do, whenever the market falls, they pull out their money, and that's the most negative thing they do. Because whenever the market settles, what will happen? The market settle, what will happen? It has to go up again. Obviously it cannot just like a falling ball, it will keep falling, keep falling, keep falling. Our GDP has to be stable at some time. When corona will go, we will grow itself. When we grow, our market will grow. And when market will grow, that particular focused equity, or that particular technology, or anything, it has to grow, and they will recover. But how will they recover if they do not have money to average? How will they make the most of it? Because okay, we know that if it will recover to at that particular point, we will be like 0 0. We are at the break even. But if we have so much money that time, and they know that yes, this is the right time to buy, and we don't know, and what we have done, we have pulled out our money. We are not just confident itself in them. So that's the negative point. So what we have to do, we have to increase the SIP when the market falls, and decrease the SIP when market is too high. Are you getting my point? That's the knowledge. The person who is working on market has more knowledge, and they are getting some but more return than the person who doesn't have the knowledge. So that's why we are betting on that particular analyst, because he know when to buy, and he is doing work. That's why he's getting 14%, and the bank are getting just 10%, because they are giving us 5%, so they are getting 10%. If they are getting 14%, why will they not give us that 10%? Because we will give more money. Even if we will not give that money to our mutual fund, even that money will be not in our EPFO, because they have some risk, and we will keep it in our bank, and they will get so much money to lend everyone, right? So why they are not able to give? Because that's not their job to invest. They are just lending the money to someone else, and they are doing the job. So that's how the risk is high, because it is only about technology. So it happened that for the next 5 years, the technology boom will be down. For the next 10 years, it can be possible that technology will be down. So your return will be down for 10 years, but it is possible that for the next year it will be more than double, more than triple, more than four time, and it will come out at 4.1%. So that's why we have to manage the risk. What we do, we keep the balanced equity, like focus equity, hybrid, or we, instead of taking the particular sector mutual fund, we are going for equity, focused equity, like focused equity. I have invested in this SBI focus. I am not recommending anyone, because there are many more which are good, but I have invested in, because what I have in my mind, like it is focused equity. What they are doing, it will invest in maximum 30 stocks of the multi cap. So multi cap may they are investing, like they are taking the small cap also, they are taking the in technology also, they are taking the medical also, they are taking the Reliance, like large cap also. So it is a combination of 30 stocks. So even if 5 fail, 20 25 will work. So that was in my mind, so I take SBI focus. Next is SBI small cap fund. Why I have invested in? Because I knew that from the last 3 years, from 2017 to 20, the small cap was about 50% down. Are you getting my point? 50% down. Whoever invested it in this cap for like let me show you, for like 3 years, the return must be 50% down. No, not the return, means shares was 50% down. They can be 10% or 20% overall return. The can be uh, historical NAV. See, see, they are showing for 1 year all. Okay, 1 year. Why there it is not changing? Let me put the date.
Change the date because of the dates.
Yeah, let me put the date. 2016 December, 1 December 2016. Let's see if they're showing it or not. I think they don't want to show the fall. Okay, no issue. Portfolio document performance. Mutual cap. See. In last 5 years it is 15. In last 3 years it was 4%. In 1 year it is 24%. So you can just assume like they have managed the risk. But I am talking about like the small cap stocks were 50%, 70%, 40% were down, and they have managed somehow and get for last 3 years they are getting 4% return. And what we can see, oh, we are getting 18% return. We have to invest in this. And when we are getting 4%, we will like mutual funds are fraud, mutual funds are very bad, and they are not doing what they are saying, 18%, and we are getting just 4%. But in within just last 1 year, who have invested, they are getting 24%. So I was aware that they are down from last 3 years. Now it is a chance, means I am taking the chance, it is a chance that the next boom will be a small cap. So I have invested in December. It is like for 1 year. December 2020 I have invested. Oh, sorry, 19, and it is December 2020. So I am getting, currently I am getting, let me see my phone. I think I am getting before the Monday fall I was getting like 30%. And right now it means it will be like more than 25% for sure. So are you getting my point? How the risk? What is the risk in mutual fund? So I think you
So
you you
what I
understand now.
understand, it
Yeah.
it is dependent upon the share market itself, like it's fluctuating day by day. We can't like imagine, or we can't say like after 1 year we will get this much of percentage or not, right?
Yes. So that's why all the schemes, all the investment option you have is for long term. EPFO is for 15 years. Smriti Sukanya is for 21 years, and we are not even know that if we are receiving the interest, what interest rate we are getting, how they are managing our fund, anything we don't know, but we are okay with that. And same we have to do with our FDs. Same we have to do our SBI mutual funds, not SBI mutual fund, with mutual funds. Okay, tell me, have you ever inquired with your bank that you have deposit your money for 1 year in FD, and if my FD is safe, if I am getting the same amount of return which you have promised? Have you ever asked? No, because
Yeah,
you
yeah,
you
I asked because I have the document where it shows at the at the time of the settlement, it like it mentioned in my document, like I
Mhm.
will get 6% of interest or something like
Okay,
that.
okay.
So I will get that.
No,
So
you will get that, but you will only inquire when you will not get after 1 year, right?
Mhm.
I'm saying within 1 year, have you ever check here that,
No, no, no,
oh, why my interest rate or getting or not? I have to call after 1 month that if my money is safe or not, right? No.
Mhm.
Yeah. So
No.
same with mutual fund. When you have invested in December and in March fall, what you are doing? Oh, after 4 months, my return is minus 23%. I'm telling about myself, minus 23%. So I should stop my SAP. I should call the manager, or I should write an email. Why after 4 months my return is minus 23%? Why I'm doing this? If I have if I am keeping my money with bank for 1 year at least, I am keeping my money with government for 20 years, and but I am asking my money and return of that 18% within 4 months. So that's the wrong thing we are doing while investing. So now I haven't asked. What I do, I have increased my SIP, very minimal increase, but I have increased my SIP in March. So now I am they are giving to everyone like 24%, but I am getting 31.88%. So it's the difference, because I knew that market will rise, market will work, and we have to be confident on our investment thing. We have decided it, and it will be the best investment for us. We have to be little patient. Actually, the patience is all about. So now I am getting
Yeah,
31%.
whatever you just said actually kind of happened to me, but how do you pick when to go in and with what fund to go in? That's the crucial part, right? If you do it wrong, you're gonna be negative on your investment forever.
Yeah, so what on the core thing is, whatever you do, whatever you invest, go for the long time. Invest the money which you do not need for next 10 years. That's it. So what I have shown you, that each and every fund is working
But, but
fine
how do
if.
we know? But how
Yeah.
do we know like which one is good or which one is not good? Like,
Yeah. No, I'm making the thing simple for you, just by telling that take any fund, take any fund, and you can see the each and every fund has the return minimum of 12%, 13%, 14%, 15%. Means I'm
mhm,
just making it as generic for now,
mhm,
right?
okay.
Just
Yeah,
take,
but
just take any
when
fund, but I will tell you that which fund you can choose which have the means normal risk or anything. I will tell you. So but what I am telling you, even if you select the wrong, because you don't know which fund you have to select, and I am not here to tell you, or means even I am the new, because I am not a mutual fund guy. I am working in market itself, so I am least bother about my return in mutual fund. But so I may tell you, like invest in SBI focus equity, and it can happen that for 5 years, next 5 years, it is giving like 6% in return, right? So but I am telling you, even if you invest in private banks, banks are the worst. Not private bank, public bank are the worst share right now from so many years. After means from 6 years, the any PSU have not worked, have not increased. I will show you. So even if you have invested in any PSU bank or any company from the last 6 years, you would have the zero return. Means the share price must be 22, and after 5 years it must be 22. That's like this. So but it they can have a boom. They can give 1,000% return, 100%, and 20%. Who knows? No one knows. Even the fund manager will not know that thing. Okay. What they do, they keep managing the risk. So what I am telling you, if you are working for 16 year, 11 year, 20 year, you have time horizon of 20 year, 27 year, you will get the return of minimum 14, 15, 16, 13% as per this data. So we have the data itself, because we even fund manager don't know the future. So even you have invested in bank and financial, you will get the 12%. So that's my point. If you have invested in corporate bonds, you will get 10%, but the risk is moderate. See, the risk is coming down high to moderate, your return is coming down. So that's how you have to manage. What you can do, you are asking how we will we select. You can combine two or three. How I combine? I have taken focused equity, I have taken index fund, which is more safer than focus equity, and again I have taken small cap. So I have put my SIP lowest in small cap. So that's how I minimize my risk. I am making a SIP of double in my focus equity, and I am little lesser in my that index fund, and little lesser in small caps. So that's how I'm managing my return. And so I have minimized my risk in small cap, because if I have 1,000 rupees, I am putting like 250 rupees in small cap. So my risk is 250 rupees. So even if I need money, I will take out that 500 rupees from higher the the fund which are giving me higher return that time. So I can use that. So at least I will be not in negative return, and I can keep that small cap for longer period, so that I know that after 10 or 20 years it was giving 15%. So it maybe it after 3 years they can give boom. That time I will use that money. So that's how you manage your risk. So if you are asking which uh, fund you have to use, so I will say for you can divide your amount within the mutual fund itself. So as you don't know which mutual fund you have to take, so how you will minimize your risk? You can keep your 25% in FD. You can keep your 25% in focus equity. You can keep 25% in EPFO. So that 50% is safe, 100% safe, I can say. Because means nothing is safe, but I can say for with the government and bank it is 50% safe. Even if there is a risk, or even if the return is low for next 5 year, you are getting that particular 7%, 8% more than inflation. More than inflation you are getting from that. And that pure cash you can use your FD in heavy risk or anything. And whatever the money is in our mutual fund, and if we are not getting that particular return, you can go for long term, and you will not use that money, right? So actually the thing are very simple, but we are making it complicated by thinking so much like about the risk. So you can manage the risk. Just manage the risk and everything will be will look simple to you. Means I have invested in so many things right now, and I am planning for next 20 years. I am not going to touch that for the next 20 years.
Okay, okay.
Yeah, yeah.
I don't know, man. I just see a negative return and then I just freak out and I stop investing in the.
No, no, no. See, what I have told you, the person who have zero knowledge means no, I'm not talking about you, everyone. That 99% that 99% of Indian population don't have knowledge about the investing or anything. So not you, even 99% people of mutual fund, means the 1% is only investing, and the 99% of that 1% is pulling out their money. So not you, everyone
Pulling
is doing
out
that.
is not something that I do. I just stop putting in more money. So you said you start a SIP and you just put in money every month, right?
Yes,
That
yes.
concept I do not do. I just stopped investing itself for a year now.
Yes, I will
Once
tell
a
you.
year.
I will tell you why you should do if you have money, and why you should not. Right? I will tell you. I will make you understand with a simple thing. I will tell you, and you will say, "Oh, see, okay, tell me." Just one thing. If you are investing 10,000, right, and you are getting 10,000 rupees, and you are getting 10 units of 1,000 each, you are getting 10 units of anything of any mutual fund NAV, you are getting 10 units. When market fall, the value of all value will also fall, and it is like 500 per unit. So when you invest 10,000, that time how many units you will get? 20. Instead of 10 you are getting 20. So see, now you have 30 units, and when market rise, the 30 units will rise, not the 10. So see the compounding effect. Now the earlier you are getting the 10,000 when it will be at the break even point. Now you are getting the value of 30, and it become the instead of 24%, it become 31% in like in my case. See, so
Yeah,
simple it is.
yeah.
Yeah, that's why you should not stop your SIP. For lump sum, there are different criterias. For lump sum, you have to be more worried, more be means more vigilant. But for SIP, you can keep, because it is not a stress or burden for us to put that particular amount, right?
Okay.
Yes, yes. So see, the fall was so heavy, right? See, full market was down this much. But I will show you the more data. See, for 1 year you will be like market is like gambling. See how much it fall, how much it come out, right? I will show you a data of monthly chart. See the market, the fall will be like a small drop now. See the market
Yeah.
start from here and it keep increasing. It fall in 2008 recession. See same like in 2020 it fall like, and it again coming up, it again fall like anything. You know that how much this fall was low down and everything, it was falling so hard. And now again what happened? Everything has been sorted, everything has been recovered, every return has been recovered now. So
Yeah.
that's why we say for a longer period, no matter how, our GDP will increase, our market will increase, our economy will increase. So anyhow, whatever the situation is, whatever the, whether it is 1990 fall, the Harshad Mehta fall, 1992, 2000 internet bubble, when everything was like from 300 to 30,000, it was like for any technology stock, the price was from 300, it went to 30,000, like, see, within 2 years. So and when it burst, the company was bankrupt and anything will be was out of the market.
Yeah.
And again, but what happened? See 92 fall, I don't know if it will show 2000 fall. See, I think it is like a 100% fall. I will show you from here. See,
Yeah. Yeah.
53%, 50%. Right now in this corona itself it was like 39%, but that time it was 50%. And everything you have, it was become half. So what happened that time? Nothing. See, after that the rise was, I'm not telling that to invest in share market, it is more than risky than anything. It rise 60, so 600 times, 600%, any six
Yeah.
times. So I'm saying it not about the market, it about the GDP, it about the growth of India. If you believe in that, the India will keep growing, keep growing, and will surpass the economy of Japan, then America, then China, then you have to keep investing in our economy. That's the reason.
Yeah.
And if you think that government, the world will doom, and there will be all over the corona, and we all will die, and India will be means like completely vanished. So what the use of money then? You will also vanish with the India or an other country. Then what will you
Yeah.
do with the money? Nothing.
Yeah.
It will be like a piece of paper if there
Yeah.
is no government, no economy. So what will you do? Nothing. So
Yeah.
either go with means either we go with the economy or India, or you have you will have the piece of paper with you. That's it.
Yeah.
So
I
I can.
just tried logging into my stock market portal, and it looks like my portal itself is only inactive. I will have to call them.
For what?
Yeah, my Zero the account has become inactive for no reason. I don't know. I haven't logged in for a really long time.
Okay, okay. And no, I have no idea about the logged
Yeah, yeah, I'll check that out.
account. So because I am working on it, so I haven't means I haven't heard about the account will get locked down.
Yeah, yeah, it's saying
Okay,
everything zero zero now it's showing. So
okay, okay.
I'm little freaking out. I'll
So
just call them.
now you see I have shown you that fall of 50% now, but can you guess where it is? The 50% fall. It is like a little pump. See, little,
Yeah,
it looks like a little pimple. And after few years that this 2008 fall will be look like, oh, it was a so small fall, but 2020 fall was so heavy. After 10 year, 20 year, 15 years, you will be it will be look like so small like this. Now you are
yeah,
now you are seeing like one and two, three, and four. There are four. But if I will just zoom out and I will measure that fall, it will be also more than 10 or 20%. See, see, 15% fall it was. So that's how the market works. Even if all, but what happen if you bought here for 1 lakh and just come out from market at here and then it will go up? You will be wrong two times. You will have the loss two times actually. One is this 1 lakh and it will become 60,000, and you come out and you say wait, and it come out to all time high, and now you have invested that 40,000 and again it fall. So that's why we do not know when it will fall, and no one can tell.
Yeah, that's exactly what's happening with me.
Yeah, even see, even the company owner don't know that the market will fall. Even suppose if they know, why they don't sell their shares at that so high price? Why they are not selling? Because they even don't know that the market is going to fall. If a fund manager want to maintain their return so high, they can make the return at 50%. How? They will sell at this point, they will buy at this point, they will sell at this point, they will buy at this point. It's so easy.
Yeah.
Why they are not doing that? Why they are not maintaining their return to 100%, 200%? Why they are doing like 14%, 15%, 60%? Because they also don't know that when market fall. And and even for any share, if you tell any name like Reliance or any,
Okay.
yeah, if I take any name like for example PNB, okay, any name, so even no
You're
one,
still recording and your recording is still on.
yeah, recording is still on.
Cool.
Yeah, so if no one know that when it will fall, right? No one know any share. I will say Reliance. What happened? Spelling. Take Reliance. So take it Reliance. So if the investor of Reliance know that it will going to fall from here to here in 2020, why he is not getting out from this stock itself? Why? Because he don't know. He was just thinking like it fall like 10% from here, again 10% here. It maybe it fall for 10% and again bounce bound, again 10%, again bounce bound for 10, 10, 10, 10 करके it fall like 40%. So no one knows when it will come up. So even if someone know that yeah, market is going to up from here, uh, have I not sell my home, my close my FD and everything and my EPFO, my PFO and invest here, and after 6 months I take that particular amount, that double amount, and again put my in my FD and anything. Means
Yeah,
if
makes
I
sense.
have no knowledge, even the big analyst, even Warren Buffett or Jeff Bezos or the Mark Zuckerberg, who haven't why they haven't done that? Because they don't know what will going to happen. So if someone say that market is going to fall, it means he is just predicting. He's just telling his own analysis. He's just telling his what he is thinking. But the market will think same. No one knows. Okay. So
Yeah.
how to work on the market and how the that funds are working on it? What they do, they invest in good companies. How we know that the company is good or not, right? Because they know how to read their balance sheet, how to read their fundamentals, how to read their, but we don't know. We even don't know that if the Reliance will able to uh, fulfill their debt, they return able to return their debt or not in next 1 year, 2 year. We don't know. We are just saying that Reliance is the biggest company, Ambani is the sixth richest person, seventh richest person, eighth richest person, but he has 1 lakh crore debt from the Indian banks. Will he be able to return it or not? We don't know. And once the news came out that he will not able to return, the this share will fall to zero, and
Yeah.
whoever have invested at that point will be stuck in debt, and it will not come back. How? See, Arcom. Are anyone using Arcom from two of you?
No.
Why? Because it doesn't exist. See, The price was 800. Now the price is 2 rupees. See, if it is a good company, just tell me if it is a good company, so do the mutual fund or anyone have sold it, or any good investor, or any Rakesh Jhunjhunwala or Warren Buffett or banks or mutual fund, have they sold it there? Why? Why they have sold it? Because it doesn't exist now. The Reliance.com doesn't exist. Even still, how many person are buying and selling it? Let me show you. See the volume. The lower thing is volume. So right now the volume is 84 million. So who is buying 84 million and 43 million, 84 million, 61 million, 48 million every day? Who is buying and selling? Because even the companies, the value is rupees 2 rupees. Even the Anil Ambani is bankrupt, and who is buying selling? These are the operators. They are just, what they are doing, they're pumping the money in it, and when the price go up they sell. And who is buying? The retailers. People like us don't know, we don't know, and the thing, we do not have the knowledge, but they see, I have invested in this stock at 1 rupee and now it is 2 rupee. My money got doubled. And when it fall like this. You are not able to sell it, because it will keep in lower circuit. It means you will not able to sell it. So when you will able to sell it at this point, but, you have taken for 1 rupee, you will get that particular 1 rupee or even less, right? So that's why do not go for penny stocks, that do not go for anything that you don't know. See, someone has invested in it for 40 rupees, 12 rupees in February, March, April, May, June, it was like 1500. So I don't know what will be the return. Will be 100 times or something. I don't know. Even this candle says 139%. And 38%, 140%, 170%, so almost 1000% approx. So you are getting just 1000% in 1, 2, 3, 4, 5 months. Why you are going for mutual funds? So everyone will think
Yeah.
like that, right? Everyone will think like, if
Yeah.
market is giving 1000% in 5 months, no one can give it. But what happened next? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 means almost within 2 months, within 8 weeks, what happened? It become 300.
Yeah.
And
Dude, I really have to drop off now. There is a meeting
okay,
like
okay,
at 6:30 for me.
okay, okay. So
And I guess even Captain dropped off in between. Not sure.
okay, no issue. We can stop it here and we can continue later on, right?
Cool. Cool, man.
Yeah. Okay.
Thank you so much.
Okay. Thank you.
Bye bye.
Bye.